So, one note about monetary policy. The Federal Reserve, which is an independent agency, is the one who basically sets our monetary policy. And that is to say, they set the prevailing interest rate. So, in essence, they control how much money there is out there. The prevailing interest rate affects all sorts of things: the inflation, employment, investment, everything. So basically, what they do is they can say, we're going to raise interest rates. And what that does is that encourages investment and discourages spending, right? Because the higher the interest rate, the more it costs you to spend money, right? If you have uh, a the choice between a credit card at 1% interest rate and 20% interest rate, you know the one that's charging you 20% interest is basically costing you more to spend the same amount of money, the one that would charge you 1%. So by raising the prevailing interest rate, money costs more. So people are going to spend less, but they're going to invest more because they get higher interest on their savings and their investment. So when they invest more, that means there's less money out there being spent in the economy. So a higher interest rate basically shrinks the money supply. A lower interest rate then encourages spending because money costs less and because you're not earning as much interest. So why bother saving it? And that then increases the amount of money flowing and increases the money supply. So this is why we call it monetary policy. It's all about the supply of money, if there's a lot or a little. And this can affect inflation, employment, everything. And ultimately, we're going to hear a lot about the Fed. We've been hearing a lot about the Fed recently, and we'll probably continue to hear about it for a while because of concerns over inflation currently. So we tend to hear a lot about the Fed when there are concerns over inflation or real concerns that the economy is shrinking, that we might be going into a recession. So if you start hearing about recessions or inflation, you know you're going to start hearing about the Fed and monetary policy. Now, the Fed doesn't just set monetary policy, they also do regulate banks and provide certain financial services to banking institutions, which is really important, but not important for our purposes today. So remember, monetary policy is set by the Fed, and that is how much money is in sort of the supply in circulation, and that is controlled by setting the interest rate.